Joining us now for a one-on-one interview here from the New York Stock Exchange is Caleb Silver, the editor-in-chief of Investopedia. Nice to see you again. Thanks for taking the time.
Good to be here with you as always, my friend.
So there's so many fascinating things, Caleb, I think you have insight to in your role at Investopedia. I want to start with the Investopedia Anxiety Index, a bit of a gauge of kind of investor sentiment based on the behaviors, the habits maybe of Investopedia readers. What does that tell you right now? What are you seeing?
It tracks, the anxiety index tracks traffic to fear-based terms. Fear-based terms around the markets, like market crash, bear market, correction. Fear-based terms around personal finance, like forbearance, foreclosure. Fear-based terms around the macro economy, like recession. So the more traffic you get to those terms, we get a sense of how individual investors, consumers, households are feeling. It's like having your finger on the pulse of these people and all the ways money affects their lives. And right now, with the stock market dancing around record highs a little bit off the last few days, it has been not so concerned about the market as much as personal finances. We see spiking interest in things related to people's personal finances and their security around their personal finances. So you ask yourself, how could we be at record highs and the economy seems to be okay, but people are concerned about their personal finances? This is this big gap we are seeing right now in America where shareholders are doing great, asset holders are doing great. Most people, though, who don't own a lot of either of those things are not feeling very secure about the future. Inflation obviously has a lot to do with that, but also uncertainty in general has a lot to do with that.
I'm really interested in how you see the bifurcated economy, right, between the haves and the have-nots. This high interest rate environment, Caleb, has shown that separation, to your point, right? If you have some of these income accruing assets, hey, you love high interest rates, but the same cannot be said for borrowers. How do you see that kind of separation reflected further at Investopedia?
It's only got more extreme, and we can tell by the things people are looking for, right? You can see who's the ultra net worth investors, because they're looking for asset protection. They're also looking to generate additional alpha, looking up pretty obscure inverse ETF products and other things like that where they can generate more yield. Also a lot of traffic to private credit and private markets. I know Goldman Sachs made a big splash there recently, but I think high net worth investors are looking for other ways to make money in an environment that doesn't look so certain right now. But other people, consumers, especially those that are worried, are thinking about loan consolidation, personal loans. What happens if I tap my 401k? When we start to hear people asking about the penalty for tapping their 401k and the consequences, you start to get a little bit more concerned. That's an alarm bell for us. That's a canary in the coal mine. Not that a lot of people are doing it. The fact that they're considering doing it is very interesting and notable.
And I mean, our viewers, our followers over at Public, I know they're well familiar with you and Investopedia, but in case we have anyone who doesn't know, walk me through what that looks like. They look up some 401k protection uncertainties. What sort of information does Investopedia look to provide them to make them more informed investors?
Yeah, well, most of the people that come to our site are coming because they are searching for something. It's an intent-based audience, and because of that, we kind of know how they're feeling. They wouldn't be here at Investopedia unless they were searching. We get a very popular question, somewhere between 10 and 30,000 times every month. How should I invest $10,000? Well, you know that person has intent. You got to know more about that person. Are you just coming into the money? Do you have debt? Can you invest it? But we get that question a lot, but also when you get the question of what's the best personal loan right now? Or what's the best debt consolidation credit card right now? That's a very specific question, and they have come to us through a search engine, and we're giving them that answer, plus some ideas about how they can lower their debt. You know something's going on. So we are going to be 25 years old this summer, Investopedia. We've been on the internet since 1999. That is like 250 real years, right? And we have thousands, tens of thousands of documents on the site, answers to questions like that. So we know what people are feeling because we usually have a very high search ranking, and we have a lot of people who come to our site, somewhere between 10 and 15 million people every single month.
Happy early birthday to you and your colleagues over at Investopedia, by the way. You may have heard there's a election. It's pretty big, a few months away at this point. When you look at the issues, according to American voters, the top polling issues, what are the things that are most important to you? Caleb, what's amazing to me, 3 of the top 5 deal with the economy. It's jobs, it's inflation, it's national debt. What issues do you see in the political arena reflected in research at Investopedia? And what do you think are the political stories investors might pay a bit more attention to as we get closer to November?
Yeah, inflation obviously front and center, and that's just not going away. You could look across any publisher right now. That is the dominant theme. In terms of, the deficit, we've been worrying about that for a long time. It's only going to get bigger. I don't care who gets elected. Here's what you don't need to care about about the election. What's going to happen to the stock market if one party or the other party wins? Because it's pretty much a toss-up in terms of performance. 12% if the incumbent Democrat wins again, 11% if a Republican takes the Oval Office after a Democrat's been in it. So the returns are basically the same, and there really isn't that big of a difference who's in the Oval Office. It's about the time they are in the Oval Office that matters a lot. Now, something that does come up with the election that I know is on our readers' minds and a lot of people's minds is the extension of the Trump tax cuts. Is that something that's going to happen if Trump gets elected? Would he extend those tax cuts? Would he fast track that? What is going to happen to the tax rate, the corporate tax rate that the Biden administration moved up a little bit? That's on people's mind here. Getting back some of those child tax credits or getting a child tax credit passed, that's front and center for a lot of people. That's where you have to be thinking about the election. But in terms of market performance, I'll tell you what, expect volatility, but don't expect returns to go too far either way, because over time, they're pretty much the same.
Yeah, absolutely. That's a really good point there. Have there been any popular searches on Investopedia so far year to date that have surprised you?
Well, people are always interested in the inflation rate by president. And we have a pretty popular article on that because they want to pin inflation to the president. The president can't do much about inflation. It's a supply-demand issue, and if companies have pricing power, guess what? Prices go up. And guess what the cure for high prices is? High prices. Because we tap out eventually, right? So presidents get blamed for inflation. Presidents take credit for strong stock markets. They don't have too much of an impact on either. So we keep getting this search for top CD rates. It just tells you that people are still looking for 4 or 5% to hold on to. They want security. We also survey our newsletter readers every 2 months. How are you feeling? What's your sentiment? Bullish, bearish? What are you afraid of? What would you do with an extra 10 grand, right? If you could buy 10 stocks now for the next 10 years, what would they be? We want to know what they're really feeling and get inside their minds and their psyches a little bit. And they're cautiously optimistic, and why wouldn't they be? This is a great time to be a shareholder. Markets near record highs, companies buying back their stock, issuing dividends. This is a good time to be a shareholder, right? And we're probably going to get lower interest rates eventually. Whether that helps or not, I don't know. But they're cautiously optimistic, but they're not all in. And you know what happened in April? It was one of the slowest trading months we've had since 2020. So there's not a lot of individual retail participation beyond passive investing and 401k investing in the stock market right now. They're looking for a reason to get excited, and they just don't see it.
I'm curious about that one note about the 10 stocks. What would you I'm sure you got NVIDIA, the Mag 7s, maybe an AMD, I would assume. But what does that data tell you in terms of either the individual companies, Caleb, that people are most interested in, or what they tell you in those sorts of surveys?
It's the home cooking.
Yeah.
They love the top 10 stocks you probably find in the S&P 500 right now. Sometimes there's some outliers there. Occasionally, if oil prices are high and the oil stocks are doing well, ExxonMobil may pop its way back into the top 10. But it's a lot of stocks that you would assume would be there. Amazon, Microsoft, Apple, NVIDIA has been there. It's held a pretty good spot. Tesla is always popular with our readers. And these are self-directed investors, typically a little bit younger than me, in their 40s, right, who put their money to work. Some of them work with an advisor, but a lot of them are just interested in investing. And that top 10 list is interesting because it also has things that older investors might prefer, like a Disney you might see on there, or Verizon, or stocks that pay dividends that they've been holding on to for a long time. You don't see a lot of the meme stocks passing through the top 10. And even for the top 10 that they would hold for the next 10 years, those look a lot like the top 10 in the S&P 500 today.
Caleb, what I admire about the work you do, I know you're so passionate about reporting in other markets. I know you go down to South America several times a year. For our readers, for investors who are looking for emerging markets as potential opportunities, what out there really excites you?
Yeah, what's interesting right now is 3 of the top 5 global markets are in South America. I fell in love in South America. Good things happen down there. Right now, some of the top 3 are Peru, Argentina, and Colombia. Why? Because of commodity prices, right? You get high commodity prices. These are high commodity producing, exporting nations. Their stock markets are reflecting that. They're not as big and they're not as liquid, obviously, as the US markets and the New York Stock Exchange, but there's activity there. And it's not something as an investor, as an individual investor, and I like ETFs, I buy some country ETFs, but I don't load up more than 10, 15% of my portfolio. That's the way I rock. I don't want that much exposure, but I do want some global exposure because it's not just a bull market here in the United States right now. Bull markets running around the world right now. You just got to be careful and time those carefully.
What is a really important story in the world of finance, business, or economics, Caleb, that you think we are not talking enough about?
Well, it's starting to get the attention that maybe it deserves, or maybe more attention than it does deserve. But all this attention on private credit and the private capital markets and private equity right now, where's the money is like water, JD. It needs a place to go. And 4 or 5% is fine for a little while, and a 12% return in the S&P 500 is fine. But big money's looking for big returns. And where are they finding it? In the private markets right now. You're hearing a lot about big investments. Goldman made a big investment in the private markets right now. Every time I talk to pension funds, every time I talk to the CEOs of some of the biggest money management firms, that's the one thing that keeps coming out of their mouth. Private credit, private markets, and private equity. They're looking for returns, and that's where they're happening.
For my last question, I think there are only 2 people in the world of financial media I could ask this question to. The other is Josh Brown. I already asked him last week. Now to you, who won, Kendrick or Drake?
Well, I'm a Kendrick guy. So I'm going to say Kendrick right now, but I think both of them won because it got them a lot of attention. You just hate to see that this kind of diss raps happening. I'm a freestylist myself, and when guys I respect go to war like that, it never ends up pretty. So I want it to be over, and I want them to go out and make awesome albums that don't talk about each other at all and get back to what they do best.
We got some new music out of it, but it kind of makes you a little uncomfortable.
It's like breakup music.
Over the time, it kind of is. Caleb Stiller, thanks for taking the time.
Thanks for having me.
Great to have you.